Hey guys, this is Market Update. Something just happened which is typically very, very good for Bitcoin and crypto, which is this inflection to the upside in the liquidity delta metric. You can see what happened last time here. Huge bull market. So is this happening again? Will it continue to grow? Let's have a look at how that may affect things. So for right now, the market clearly is in a phase of just neutral sideways action. The buyers came in, pushed the price up around the ETFs. Everyone took their positions. Everyone got in. There was a rush in. Price goes up. All of that's done. So we're just in this maybe few month or even longer period where everyone's taken their positions. Liquidity is a bit lower. You can see open interest and also the funding rate's pretty much flat right now. Everyone's taken their positions. Everyone's done. So it's just a sideways market for a while. Fairly weak. I wouldn't say this price action is weak, but it's just nothing, right? Nothing's happening. Everyone's got their positions. Everyone's waiting. Maybe the second half of the year is another inflection because we potentially have rate cuts, more Fed action, right? So that's going to move markets again. For right now, everyone's just in waiting mode. So that's fine. Here are some price levels. So you can see we're actually just kind of dripping away, which is typical Bitcoin price action because everyone kind of gets bored and leaves and it just kind of drips, and then something happens and you get a rush to the door again and you get a big price movement. So for right now, it's just kind of a drip away, consolidation round, nothing much happening. To the downside, I have this box right here as a technical level around 50K. You can see just these two bits of price action here. If you go to the 1 month, it actually makes more sense. That would be the lower level, which would easily be within the price range, right, of a drawdown, a bull market drawdown, 30%. So that's something that could happen. I think that's probably a bit low for this phase, right? For right now, it's a consolidation where I'd say, 58 is the level where, we've tested it once, we may test it again, but sideways price action, waiting for, Fed speak, potential rate cuts, looking for inflation, not to be rising again, right? If inflation starts to come down again, Bitcoin's going to rip. But for right now, the market's just waiting. If you do trade though, Bybit, check out the deposit bonus in the description. If you make a deposit and trade up to 30K as a deposit bonus, just check the link below in the description for the details. So the real question with Bitcoin in this cycle and in future cycles is liquidity going to continue to increase? What that means is the central bank going to continue to print money during crises and pump it into markets? I think the answer is yes. The second one, is the government going to continue to create debt and actually take money out of savers' pockets and then pump it into the economy in these areas to create stimulus? I think the answer is yes. So if those two things are true, assets will continue to price in all of this stuff by going up in price. Bitcoin is an outlet for that. And so if that continues to happen, Bitcoin will price that in and go up in fiat currency terms. Over the very long term, it's also very clear that if you hold BTC, because it's a savings technology and it has a fixed supply, all you have to do is hold it and wait a really long time. And then the free market should reduce the cost of the stuff you want to buy over time, because we as humans invent ways to get more out of less. And so you can price all of that through an asset that isn't inflationary. And so what happens is that the cost of those things actually should go down in Bitcoin terms. So there's two things. We obviously want things to get cheaper over time, and actually the free market should provide us with that. So we can price that in with a neutral currency like Bitcoin. The second thing is we of course need the asset to price in all of the currency debasement and all of that stuff if it's happening. I think Bitcoin does both of those things, but we can have a look at this as well, those two mechanisms. The first one is the free market makes things cheaper. I'll show you that happens. And the second thing is the government and the central bank completely distort free markets and make things way more expensive. But as long as we have an asset that prices that in, we're good too. Actually, it's not just Bitcoin that does this. There are other assets as well. So you don't have to, use Bitcoin. It just is the best performing large asset. So this shows us the amount of people that want to move to another home in the next 12 months. It's just one way to look at the under 40 age band, right? So this is not boomers, kind of younger people. They're getting kind of crushed in the property market. I mean, it's very clear that property is way more expensive than it was in terms of wages, right? So property's got way more expensive, but why? Like, why would it do that? Why would property go up so much faster then wages are going up. Doesn't make much sense from a free markets perspective. You can see older people, potentially have benefited from that huge rise in the price of property over, the last 20 years or so, right? So, and of course, these people have paid off a lot more of their mortgage. Maybe the house has gone up a lot, way more than the cost of the house in terms of what it cost plus the interest, right? So they've benefited, the older people, but the younger people are getting crushed. Why is that dynamic playing out? You can see the average price of a new home, right? It's going parabolic, right? Since 2008 especially. Huge rise in the price of a home. Now, in a free market, what you would expect to happen is the entrepreneurs come in, you get companies saying, what, the price is going up of this thing. I want to make more of this thing, right? And sell it to the market. And then you should get the price coming down. But as we know, a house isn't just a consumer good. It has become a store of value. And so this market, the housing market, is not a free market. It's not open, it's not free, it's not open to free competition, it's not open to people building more stuff. It's all very tightly regulated, and the central bank has pumped up the price on purpose to essentially bail out that market because, as you can see here, the market was crashing, right, going down. Now remember, if you own a house, that's bad, but if you don't own a house, that's actually good news because the price of the house is getting cheaper. Like, brilliant news, right? If you're a young person, you can see the price of a house going down. This is awesome news, great. But the government stepped in because the young people weren't the majority of the population at that time, and they stepped in to bail out the majority, which were older people who owned a home, and so the price goes up. And so that's great for homeowners, but awful for everyone that doesn't own a home, which is poorer people in society and all of the young people, right? So basically what happened is that the government stole the wealth and the money, purchasing power of all of us through this. So this is good if you own a home. It's terrible if you don't. How did this happen, right? Because that's not a free market. So what happens is the government, or the central bank specifically, printed money to pump up the housing market. That's number one in 2008. They also did it again during COVID, right? So they printed money and they pumped up assets. Bitcoin reacts to that. But that's not what they actually want to do, right? What they actually want to do is pump up the housing market, because the housing market is where everyone's wealth is stored, or a majority of it. And also a lot of people have huge amounts of leverage on this. And so if you let the leverage fail, the whole economy goes into a huge financial crash. The whole thing crashes, societal unrest and everything. So we know that the central bank, right, with pressure from society and the government, literally prints money out of thin air to pump up the housing market. Always. And they can't let it crash. So we know that there's two things that are going to happen. Either the economy just gets along just fine, which is great. People earn some money and save some of it in assets like BTC and others. Or the thing crashes and they print so much money that the assets are going to go up anyway. Either of those scenarios is bullish for assets, and it's terrible for the currency. So you need to make sure that over your life, you hold as little currency as possible and invest in assets that are going to price in growth, fundamental growth of the asset, and also all of the currency printing, because we know that the government, right, and through the central bank, they do this. They're always going to print money to pump the housing market, and other assets are going to price that in too. So the housing market down here, you can see US REITs go up 7% a year, right? The government and through the central bank, they print money to force this up, right? So we know that they're never going to let that go down too much because everything will crash. So that will go up, right? And then we have other assets pricing this in, plus their own growth as well. Now, Bitcoin has its own growth, so it's going to price in its growth and also all of this money printing. You can see this happen. This is what happened. By March 2020, the Federal Reserve held about $1.4 trillion worth of MBSs, mortgage-backed securities. All right, so the housing market crashed. So the Fed steps in and said, don't worry about it. We'll just print money and buy all of the mortgage-backed securities. We're going to pump liquidity into that market as much as necessary, and we're going to pump up the price. And it worked as well, right? It worked to pump up the price. So they printed money, they pumped up the price, 1.4 trillion in mortgage-backed securities. During the health crisis, they resumed this, right? So this was in 2020 through to 2022, they bought more mortgage-backed securities, and then they now hold 2.7 trillion, right? So throughout that time, 2020 to 2022, you can see here that the housing market went up 40% in 2021 in 1 year. Why? Because they're smashing liquidity into the market, right? They're printing money to force the price up. You can also see that Bitcoin, went up 60%, 300%, right? Because of what people thought was going to happen as well, which is money printing, currency debasement, assets price that in. You had the stock market doing the same thing. So all of these assets are doing two things: pricing in its own individual growth, which Bitcoin has more of than any of these other assets, and also the debasement of currency. So young people have an issue in that the older people stole all of their purchasing power by printing money and raising the price of a house being the store of value asset, right? So we now have a very hard time getting on the property ladder, right? Because they forced the price up by printing money, and that's unaffordable for us now. So what we can do, right, is make sure that we always own strong assets that are going to price in their own growth and also the money printing. We know that the government is always going to print money. Now, you can see this happening as well, right? Is that it's not just the housing market now, because now we are old enough, our generation, we've grown up now, and we understand that we can't afford houses, and we also have all this student debt. So now the politicians are now saying, don't worry about the student debt as well. We bailed out the housing market, we printed loads of money for that. Now you guys can't afford a house, but you have all this student debt. So now in America, student debt is getting cancelled, literally cancelled, right? So what does that mean? It's more money printing, right? The money has to come from somewhere. You can't cancel debt. Debt has been paid out. Money has been created and paid out to institutions. You can't cancel that out. So what you have to do is simply take money from other people who didn't take that debt and then use that and steal it, literally steal their money and give it to other people, right? So that's what's happening over and over and over, because each individual group of people are now upset that other people stole their purchasing power away from them to bail themselves out. And now the students are saying, okay, well, yeah, bail me out, right? Where's that money coming from? You're stealing it from someone else who didn't take the debt, but as long as your debt gets paid off, then it's kind of okay, right? So this is what's happening in society now, is that we've got so much debt. Essentially, in an election year, you're going to have to vote for someone who promises you that they're going to steal more money from other people and give it to you, because there is just this issue of who's actually paying for this stuff, right? And you can see this happening and the way it distorts prices, right? So look at the stuff that's gone up in price and got way more expensive: hospital, college, childcare, the things that the government actually has now stepped in on, right, and has created a completely false market. There's no free market in this anymore. Get free, hospital services, right, Medicare and everything like that, childcare, and then college tuition. Well, if you're taking out $100,000 in a college loan and the government's paying it off for you, do you care what the price of college tuition is, right? So it's creating a fake market where the government steps in, distorts the market, essentially creates unlimited amount of currency, pays it off. Guess what? The price goes up. So the government had to step in through the central bank. I know they're not supposed to be linked, but they are. So the central bank prints money specifically to buy the debt of mortgage holders and smashes the price much higher, becomes unaffordable. Now the government stepping in, bailing out everyone's college tuition loans, saying, well, we'll just cancel the money. Guess what? That's the government stepping in and literally forcing money into the market, pushing the price up. Where they don't exist, where the free market exists, prices actually come down, right? Because the free market creates wealth by giving you more for less. And so where the government is not there, it actually reduces the rate at which prices rise. You get deflationary, right? Who's saying TVs getting cheaper is a bad thing? You can't price this in our current fiat currency system, right? The only way to actually save yourself from this is to buy the assets that price in whatever's happening, right? They're printing money, they're buying mortgage-backed securities, pumping up the market, they're using fiscal stimulus to, bail out loans and everything like this, taking from savers at a lower interest rate than they're debasing the currency at. So we have two options. The first one is just vote for the people that steal other people's money and give it to you. It's kind of not very nice to think about that, but that's basically what's happening, right? And the second one is, as an individual, is to understand that that happens. We're not going to stop it. It's not going to change. So we need to protect ourselves from it by buying assets that price that in. So the first thing is, what assets price that in? Well, real estate generally prices it in if you're in a Western economy, right? Because as you can see, REITs go up 7%. Now this is in dollars. Now, again, if you're not in the States and you're not using dollars, most other currencies are losing value against dollars, purchasing power against dollars as well. So the real estate in your country is actually underperforming, even though it may be going up more than this in your country and your currency. Your currency may be underperforming the dollar. So in any case, it's really the dollar that you need to protect against, because that's what we actually need to use to buy things in the world economy, right? So even if you're in Euro or UK, actually your prices are in dollars because you're buying energy and other things in dollars in the world markets. So in any case, property defends against it. You can see the stock market defends against it. This is US large caps, right? SPY, S&P 500, NASDAQ index go up 13% and 18% respectively. Okay, so they're great. So they protect against all of this, plus a little bit of growth. Then you have Bitcoin, which will protect against it, and also its own growth, which is much higher than the rest. So yeah, maybe Bitcoin isn't for you. You've got to get out of the fiat currency. And, S&P 500, NASDAQ, Bitcoin are really the standouts as kind of money for savings, right? So those are the things. Everything else is going up at a rate, annualized rate, under the rate of currency debasement. So it's a bad investment. REITs, if you're in the States, property in the States maybe keeps up with it, but everything else, you're actually going to be losing money in purchasing power terms because they're not going up at that rate of currency debasement. So investing in Bitcoin isn't really a choice between, do I want to hold my fiat or hold Bitcoin? It's really, I'm investing in these assets anyway because I have to get out the currency. So which one performs best, right? So with a house, we need a house. That's going to go up 7%, but the rate of currency debasement is at least that much. So let's say the house doesn't make any actual money whatsoever. You're just pricing in the debasement of the currency, keeping up with it, right? So if you can take a mortgage that is underneath that rate, right? So if you get a mortgage at 3 and the rate of currency debasement 7, then you're playing the debt and leverage game and actually making money out of the difference between what you're borrowing and what the debasement is happening. So that's fine. You're not making any money out of the house. You're making money out of the debt game, which is exactly what Michael Saylor does with MicroStrategy. Borrows dollars in the open market at 1-2%, puts it onto Bitcoin that's going up 50% a year. So he's happy with the risk and the volatility. So as long as you don't get called on the loan, right, during a down year, then you're good. I don't suggest anyone take leverage, right, with Bitcoin or anything else. You're going to have to take leverage with the house though, right? So this is 50-60% a year that Bitcoin is going up. It's a 4-year CAGR. So really the decision is, well, if you are getting out of the currency and you are investing, right, then what is it? Anything outside of the US is uninvestable because you've got a weak currency. In the US, you've got S&P, QQQ that go up, let's say 15% a year, and Bitcoin's going up 50 to 60. It's a pretty easy decision in my opinion, because look, they go up and down the same time. 2018, 2020, everything gets wrecked, and then they just green again, right? But Bitcoin, big drawdown, but much bigger upside. 50% a year, 4-year CAGR. So, what's the decision, right? The decision is you're going to have to invest in something. And so Bitcoin has more fundamental growth for right now over this next, let's say 5 to 10 years until it matures out and where the returns are going to get pretty low again. But for right now, as of right now, we're still in a huge growth phase. And so any drawdowns, 25% or more in a bull market, great opportunity. Any bear market's the best opportunity, because you can see even with these bear markets, they're actually the opportunity to get that outperformance because you're buying at a cheaper price. So if you do trade, check out Bybit, 30K deposit bonus, link down in the description. Crypto investor course, I'll be updating it this summer with latest research and stuff. You can check the link below as well. I'm James with ManZG. Cheers for watching, and I'll see you in the next one.